It's Monday, the 5th of September 2011. And in this Boardroom Talk special podcast, Roger Jardine, the chief executive of Avenge, joins us. Well, another of the construction companies to report its financial results for the year to the end June. And Roger, it's been a tough year.
Yes, it has been. Our revenue is up 1%, but you see on the operating profit line, some factors there, some problem contracts in Australia, the impact of the Competition Commission affecting our operating margin in our manufacturing and processing division. But overall, a very soft public sector infrastructure market in South Africa and really a bun fight for projects. The margins are tight. So overall, very tight trading conditions.
There's a lot to unpack there, but let's just start off perhaps with the biggest issue that is affecting construction companies now in the wake of Murray & Roberts' results, and that's getting your risk rating correct, making sure that you don't underquote for projects. If it's such a competitive market, how are you managing to do that?
Yeah, look, I think we've certainly, almost 18 months ago, risk management is such a big part of any construction company's DNA. And certainly on our part, we've upped our game on that score. You correctly point out, when the jobs are few and competitors are plenty, it does drive the margin out. We have focused on our operational leverage for a long time, our cost, our procurement. Because at the end of the day, everyone's pricing for these tenders, and the smart contractors are the one that will prevail at the end of the day.
Are you comfortable, though, that the tenders that you're pricing for now are at least giving you margin?
Yeah, you see, I think this is the challenge that we've certainly identified. We want to grow our order book. The order book growth that we've reported, we're up 19%. A lot of that coming out of Australasia. But, it's a bit of an art because you want growth, you want to retain your capacity, but you don't want to load the order book with low margin businesses so that when the market turns, you oversubscribed on these suboptimal contracts. So getting that right is a big challenge, and it's exactly where we are.
We hear that there's a lot of construction work going around now where people are just trying to break even. They're just trying to get the cash in to keep their businesses going. That isn't a situation that you need to be in, but are you seeing this as well?
We're seeing that pressure on the margin. In our South African construction and engineering business, the operating margin we've reported in these numbers are 4.2%. We think that between 4 and 5% we can sustain, but that's going to require a lot of smart contracting and, most importantly, looking very, very closely at how we do business. Are we structured correctly? Are we using our buying power in the market? Are we procuring correctly? So we're doing a lot of that operational leverage that's required in these times. In Australia, the operating margin we're reporting in these numbers are 2.2%. That margin should be north of 4%, but we are seeing the impact of losses and loss provisions there. We still think the sustainable margin there is above 4%.
Is Australia, the setback that you've had in this financial year, is that going to be recovered quickly? Because we see that the Australian economy, in fact, is doing quite well.
It is, and in fact, our order book growth is primarily Australia and Southeast Asia. Given the softness in infrastructure spend in South Africa and the growth outside of South Africa, at the current rate, you will see our business mix starting to shift to a greater profit contribution from outside of South Africa. In Australia, in respect of the one project that we've mentioned, that project is complete. We've in fact handed it over to the client. And the other one, yes, there's been some cost slippage, some program slippage. We've made loss provisions, which we think will cover us with regard to that one.
What about other parts of this continent, outside of South Africa, into Africa? It is an area that some of your competitors are looking at more aggressively.
I think we all are. One of the problems, I think, with the way South Africans have tended to do business on the rest of the African continent is to rush into other markets when things are quiet here and then to retreat back home when things are very busy here. And I think the challenge going forward is to embed the rest of the continent into the normal business that you do. We've opened an office in Mozambique, and our model certainly is where the market is large enough to open Avenge representative offices, put a stake on the ground, and grow relationships and grow in that market. So, yes, there are immense opportunities in other markets on the continent. there are also a lot of risks, and getting that balance right obviously is a big challenge for everyone.
We heard that Whitey Basson told us, and then Old Mutual confirmed it, and Liberty confirmed it as well, that there's great demand for shopping centres, mall developments into other parts of Africa, that some of the developers are going in. Have you seen any of that work yet?
We've had some discussions with some of the mall developments or big property funds in South Africa, and in fact it is our preferred model to go into sort of new markets together with old clients, blue chip clients. It manages your risk a lot better. So certainly as they roll out their own growth plans, we'll be right there to partner them on that.
Not such good news on the Competition Commission, the competition issues that have been faced by the whole industry. If you look back, and you are a relatively, I mean, you've been there for a few years now at Avenge, but a relatively recent joiner. And some of the competition issues certainly predate your appointment at Avenge. What do you think was going wrong?
Yeah, look, I mean, it's certainly been a great privilege for me to be part of such a fantastic industry. You know, I always say that South African engineers and our engineering expertise is second to none globally. We've demonstrated that during the World Cup and other places. But certainly to join a competition probe into an industry is the most unpleasant thing. A lot of it relates to anti-competitive behavior of the past. I think it just appears, Alec, that there was a way of doing business. Everybody knew each other. And so people spoke to each other about these things. Our challenge now as an industry is to be very honest about what happened, put all the facts on the table. I've said to the Competition Commission, you know, that it's never a pleasant thing to have to deal with a Competition Commission probe into any sector. But it's a particular bad time for this industry, given all of the challenges that we are facing. So the sooner this issue is resolved, the better. Let's put everything on the table. We've applied in terms of the early settlement process. And once the Commission makes a finding, we'll engage with that process. And as we've dealt with the manufacturing fines, where we looked at the evidence, we agreed that there was historical wrongdoing, we paid fines. We'll take the similar approach. We're not simply going to look at the findings and not study them carefully and understand them. We also have to protect our shareholders. But most importantly, I think what's going on in the construction industry and in so many other industries really goes to the heart of public trust, you know. And I think as we take South Africa into a new era, the business community also has to be part of that. And I think this investigation is part of that process.
You've had experience with that already with your concrete pipe operation,
yes,
where you had to pay a hefty fine. When you went through that process, did it automatically, or did it stir you into action on looking if there were similar kind of practices in other parts of the group?
Yeah, look, we have gone through, since 2008, a number of compliance procedures, interviews, hotlines, internet training, and a whole range of interventions. We've brought in a few legal firms to assist us. So we've really been trying to uncover this. One of the disadvantages that we have, I feel, is that the institutional memory is gone. You know, the Avenge management has changed quite substantially. A lot of people who could shed light on these issues have left the company. They retired. And so from an institutional memory point of view, we've had, I think, a harder time to uncover some of the stuff. But we have put in a very good effort, and we've made a very comprehensive submission to the Commission.
How much might it cost you?
Well, it's a bit early to speculate. You know, our view is let's see where the Commission, what its findings are, and then we'll engage with it on that basis.
But could it be hundreds of millions of rands?
Look, I think it's early to even begin to venture into a number.
It's substantial. It's not something that you're just going to wipe off the table. This is something that is going to cause the industry to operate differently in future.
I think for the whole industry, as well as other industries, you know, not just construction, the whole Competition Commission activism around this particular area will certainly change the competitive landscape, as it should.
Be very interesting to see how other industries will start waking up as well, because we've now had Pioneer Foods, we've had Sasol, we've had, to a degree, the banks have been under pressure, or certainly under scrutiny, but now nothing quite as focused and intense as the construction sector, rather. It's almost like talking to Mike Wiley from Wilson Bailey. He was saying, we thought we knew the rules, but when we had a look back at them, we didn't really know the rules.
Yeah, look, I think if you talk to people who've been in this industry for decades, that's exactly the way they would present that. I think notwithstanding the history, the global economy has changed across Europe, and the US antitrust is a big issue, and South African business certainly has to catch up to that urgently.
Looking ahead for Avenge, this has been a disappointing set of numbers, down by a third, or a little more than a third, your headline earnings per share. Is there some light at the end of this fairly gloomy construction tunnel?
Alec, I think in the current market, we've been able to maintain our dividend, for example, to our shareholders, which is quite a robust dividend as a percentage of our actual earnings. Our order book is up 19%. So our view is, if you look at our geographic diversity, if you look at our balance sheet, we ended the year with 5.3 billion rand. And if you look at our order book growth, we have very strong prospects going forward and getting through this tough time for the industry.
So the company's in good shape.
Company's in good shape.
You just need to get some better margin business, perhaps not in South Africa just yet.
Yeah, I think Australia has been doing well for us on the growth side. Southeast Asia, we've in fact just won the largest construction project ever to be awarded in New Zealand. But we're a global company. We're in 28 countries, but we'd love to be very strong in our home country. And that's predicated on public sector infrastructure spend, coming to the market. And certainly when that happens, not only Avenge, but the whole industry will be ready. And most importantly, there's no other industry like construction that can be actively involved in employment creation and jobs. And so I think it's in all of our interests, both from an economic point of view and in terms of social cohesion and joblessness, that we see infrastructure spend coming to the market soon.
Roger, why hasn't that come through, though, from the public sector?
Alec, I think there are a number of factors. The actual reason why I think is best directed at policymakers. But what we do know is that in the last couple of years, we went through the first economic downturn where we saw credit markets tightening, a lot of global uncertainty. We're now back with the Eurozone and the US debt crisis and further uncertainty. Overlay that with our own changes a couple of years ago. The National Planning Commission, in their diagnostic on what the impediments are to the growth trajectory of South Africa, have identified public sector infrastructure spend as a factor. And so for me, I think it's not a matter of if, it's a matter of when, because for our country to develop socially and economically, this will have to happen, and I think it will. The first green shoots, if you will, around spend coming is the renewable energy program that was announced. Those bids will go in November. We've been working for quite a while on developing proposals in wind and solar, and hopefully that is the start of this public sector infrastructure spend. So I'm quite optimistic that it will happen at some point.
Your shareholders are delighted that you've maintained the dividend despite that reverse in profits. Is it likely that you'll be able to do so again this year?
Look, our practice is to pay a dividend of about 4 times. This was quite aggressive. As you know from my previous roles, Alec, I do see surplus cash as a shareholder resource. This industry, in the downturn, you need a very strong buffer and a strong balance sheet. We've taken into account, notwithstanding our cash balance at the end of the year, we've looked at the cash that we needed for cash-backed bonds, joint ventures, working capital buffer to deal with the volatility, and we've still returned all this cash to our shareholders, and that really is the mindset that we are in.
Roger Jardine is the Chief Executive of Avenge.